The exception that we've seen in the market and in our own practice is a lot of tech companies, AI included, are finding that they're able to raise capital or to exit via M&A. So we've been doing a lot of startup. A lot of it now is one tech company buying another tech company. We were just talking about raising a series seed, but now she's considering, I might be able to grow by acquiring this other small tech similarly related company. So I think the first trend I want to talk about is that is not just for private equity or for big companies, it's also for startups. That's a huge trend we're seeing in this new world where liquidity, it's really about liquidity. But I've also seen really interesting, stock for stock deals. I saw last year a deal where the consideration was a simple agreement for future equity, meaning that the quote unquote acquirer here was paying with a safe. Now, if you are familiar with safes, a safe is a piece of paper. It's an IOU that says, I'm giving you this piece of paper. And this piece of paper means that at a later date, when I have an equity financing round, you get to convert this piece of paper into equity in my business. So to take a step back, I know I just said a lot there, but just what the actual transaction was a buyer giving a safe, an IOU to another tech company and buying their company that way. They were getting a right to future equity in the buyer and future equity in a round that hadn't happened yet. And so that's just one example where we're seeing both VC investors as well as founders getting creative in how they're finding liquidity or how they're growing their business. So the target here, if you think about it, is not able to raise capital. That's why they're accepting an investor. And the buyer clearly felt confident in their fundraising ability because they're saying, hey, take this piece of paper